Canadian dollar faces pressure as inflation data looms. Loonie nears 5-month low. By Fergal Smith, Toronto. In Toronto on April 15th, the Canadian dollar grappled with intensifying downward pressure against its U.S. counterpart, edging perilously close to a 5-month nadir, amplifying market anxieties ahead of the impending release of pivotal domestic inflation data. This data is poised not only to provide crucial insights into the trajectory of consumer prices, but also to potentially shape the timing and extent of adjustments in Bank of Canada interest rates. The loonie, as affectionately dubbed by Canadians, endured a marginal 0.1% depreciation, settling at 1.3785 per US dollar, translating to 72.54 US cents. This modest decline unfolded within a narrow trading band spanning from 1.3726 to 1.3786. Notably, Friday's trading session witnessed the currency plumbing its lowest intraday level since November 14th, languishing at 1.3787, emblematic of an enduring slide in its valuation. Sean Osborne, Scotiabank's astute chief currency strategist, articulated a cautious prognosis, asserting, "The CAD is poised to languish in soft territory unless or until there are discernible shifts in U.S. or Canadian monetary policy dynamics." His assessment underscores the currency's acute sensitivity to broader macroeconomic forces and policy levers. Bank of Canada Governor Tiff Macklem recently hinted at the possibility of a rate cut come June, contingent upon the sustained moderation in inflationary pressures. Expectations surrounding the imminent release of Canada's March Consumer Price Index (CPI) report, scheduled for dissemination on Tuesday, point to a potential uptick in inflation to an annualized rate of 2.9%, marking a marginal ascent from February's 2.8%, which notably represented the slowest pace in 8 months. The forthcoming CPI figures are poised to furnish invaluable insights into the underlying inflationary trends, thereby exerting palpable influence on the central bank's monetary policy deliberations. In tandem with the inflation data release, Canada is slated to unveil its highly anticipated budgetary blueprint on the same day. Finance Minister Chrystia Freeland confronts the formidable challenge of navigating a delicate fiscal tightrope, wherein the imperatives of stimulating economic growth must be judiciously balanced against the imperatives of fiscal prudence. Economists caution against the perils inherent in recent profligate spending initiatives, advocating for the augmentation of savings or contemplation of tax hikes as indispensable palliatives to assuage the looming specter of deteriorating government finances. Speculative trading activity surrounding the Canadian dollar reveals a discernible tilt towards pessimism, with market participants increasingly espousing bearish positions. Data from the U.S. Commodity Futures Trading Commission lays bare a pronounced surge in net short positions to their loftiest zenith since December, underscoring the prevailing sentiment of trepidation enveloping the currency's outlook. Concomitantly, Canadian government bond yields have experienced a pronounced uptick across the yield curve, mirroring the trajectory of U.S. Treasuries in the wake of the release of robust U.S. retail sales data. The benchmark 10-year bond yield ascended by a notable 9.6 basis points to 3.757%, momentarily touching its loftiest zenith since November 15th at 3.781%. This pronounced surge in bond yields underscores the escalating cost of borrowing for the Canadian government, thereby amplifying apprehensions pertaining to fiscal sustainability and prudent debt management. In summation, the Canadian dollar's recent travails underscore the heightened market perturbations in anticipation of forthcoming economic data releases and policy pronouncements. As investors brace themselves for the pivotal inflation data and the unveiling of the national budget, market sentiment remains ensconced in an aura of cautious circumspection, with discernible undercurrents of pessimism manifesting amidst the prevailing tapestry of economic uncertainties and policy conundrums.